Can current low Kenya maize prices contribute to a smaller crop in 2025? In this week's African Agri Overview, thanks to the support of Fieldnet, Pivot Watch and Collateral Management International, Jacques focused on the low maize price in Kenya and that it will likely result in low plantings over the coming season, probably needing more imports in 2025. Then we also take a look at the latest maize prices across this region. All in this week's episode, so make sure to stay tuned. Remember, if you would like to access our African Agri audience and become one of our valued sponsors, please contact me now on the details displayed. Together we can make a real difference in the agricultural sector of Africa. Make sure that you join the excitement around Fieldnet Pivot Watch now. Experience unmatched monitoring of any pivot, anytime, anywhere, offering complete peace of mind on your farm. Fieldnet Pivot Watch is not only cost-effective, but it's also time-saving. Ready to transform your irrigation? Contact your nearest Zimmatic dealer for a quote on Fieldnet Pivot Watch now. The latest maize prices in and around Kenya traded as follows. Nairobi on $275, Mombasa on $280, Eldoret on $258, Kampala on $315, Lira on $275, while the maize price in Arusha in northern Tanzania traded on $240 per metric ton. Collateral Management International, or CMI, operates across the continent to manage and control commodities financed by financial institutions. With over a decade of experience, CMI is known for top-tier storage standards and trusted staff. They specialize in collateral management, commodity storage, stock monitoring, and inspection services, balancing security and operational value for banks and clients. CMI, your leading collateral manager in Africa. But with that, let's jump straight into the latest news on the grain markets with Jacques.
Welcome all viewers. This week we revisit the Kenya maize market. The Kenyan long-range crop harvest well underway, and they should be self-sufficient until May-June 2025 before imports are likely to resume. As always, take note, all numbers used in our graphs are our best estimates given the limited information at our disposal and should be seen as such. Let's recap our S&D forecast. The graph illustrates our Kenya maize balance sheet history and our forecast for the 2024-25 marketing year, running from September 2024 to August 2025. The production forecast for the 2024-25 marketing year is above normal due to favorable growing conditions. We have increased our annual production forecast, including the long and short range harvest, by 300,000 tons to 3.3 million tons, compared to annual consumption at around 4 million tons. Therefore, a 700,000 ton deficit. Kenya normally at least a 1 million ton per annum import country. Let's discuss the potential import origins for the Kenya deficit. The lion's share should be imported between May and September 2025. Import origins should be Tanzania and Uganda as usual. In the previous podcast, we raised the question if these two origins will be able to meet Kenya's 2025 import need. Tanzania has just completed a bumper crop harvest with expectations of a record exportable surplus. However, as indicated before, most of Tanzania's neighboring countries will have an import need short-medium term. The Uganda first 2024 harvest was below normal, but expectations for the second 2024 crop to harvest from December normal at this point. Ugandan export demand to neighbors could also be above normal, especially to the DRC. Most of the neighboring countries for both Tanzania and Uganda already importing, and this should continue unabatedly until May-June 2025. So, the question is, will there be sufficient exportable surplus left when Kenya's import campaign resumes next year? As indicated in last week's podcast, we feel Tanzanian export demand could be less than previously thought. Logistical hurdles impeding their export campaign and slow economic activity in some countries, causing a decline in consumption and therefore contributing to a shrinking deficit. Also, by July 2025, Tanzania's next long rice crop and Uganda's first 2025 crop should be available and could ease the supply situation in the region. Therefore, given normal production assumptions in the region during 2025, Tanzania and Uganda should be able to meet Kenya's 2025 import need. This graph indicates price history of Nairobi maize. Current spot price at a relatively low $275 a ton. The NCPB government procurement arm did indicate it will buy countrywide at $345 a ton ex-depot this season. See the blue line, but have not started yet. We expect they might start buying second half of November, which could be price supportive and perhaps force commercial prices in Nairobi towards $300 a ton. Current relatively low price is unlikely to stimulate maize plantings next season, which is a concern. Next week, we will discuss the Zambia wheat market, where the harvest has come to an end and the record imports expected from January to September 2025. Remember, quality information improves decision making. Contact us for more detailed, tailored information.
Thank you, Jacques. A huge shout out to our sponsors Fieldnet, Pivot Watch and Collateral Management International for making these videos possible. Remember, if you would like to become one of our valued sponsors, please contact me now because together we can make a real difference. I'm Dr. Johnny van der Merwe. Thank you for watching and remember to tune in next week for more on the African grain markets.